Good day, everyone. Les here from BG Trading. Hope you are well. Today is March 15, 2023. We'll be talking about recession. What are my expectations for the most likely income recession? With very high probability, I have put together a lot of indicators, macroeconomic indicators that has shown me that we are more likely to go into recession than not going to recession. I'm also going to talk about stop losses, the importance of stop losses, even though it's very painful, but why we take stop losses. We've been taking stop losses all over last week, and this is a must for us in order to secure our funds, protect our capital, but mostly important, take advantage of what the upcoming opportunity once we have this massive correction finalized. So let's have a look. I just want to remind you this is a financial advice. It's just as from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, how we set up stop losses. We avoid FOMO, how we understand macroeconomics in order to make our decisions in the market, and much more, all in this channel. So if you like, please subscribe and share this video with someone that you think will be interested or understand about this particular topic. Now, today we're going to be talking about recession, as I said before, and also the key macroeconomics indicators that are pointing for what I think is almost inevitable recession, unless the Fed really change drastically its monetary policy goals. First of all, I'm going to talk about stop loss. And then why we've been taking a lot of stop losses together with some of our VIP members, and a lot of them obviously complaining about the situation. It's painful. I'm not happy myself for the situation, but I'm very grateful that we have the opportunity to take stop losses, and a lot of positions that we have entered in this unforeseen situation of Silicon Valley Bank collapse, this massive extreme fear in the market. I'm going to show you why it's so important and why it's so good to take a stop loss when you are trading small and mid-sized caps that have great chance to keep moving downwards. And also the macroeconomics that showed me why I should take these stop losses, obviously. But now I'm going to open the ASX. This is the SP ASX 200 here, okay? And then what initially without this collapse of banking, a couple of banks in the US last week, we are expecting we actually foresee that the market was going to reach 7,200, as we said before, and then was going to bounce back. And we also saw that the bounce failed to complete, and then we had this downside escalation, and that's when things start getting really ugly here. Now, according to BGS20 strategy, once you have a bearish intersection level 1 and level 2 confirmed into the chart formation, you have no protection, but only the stop loss. That's the only protection. And the macroeconomic indicators that I'm going to exploit later in this video are pointing for a major recession. I'm going to show you why it's pointing for major recession. It's not just one macro indicator, but many the most used macro indicators. So I'm going to show you here what happened with COVID and why it's so important to use a stop loss or sell or reduce most of positions during this type of chart formation. So here, guys, as you can see, we had a bearish intersection here. Okay, essentially, if you haven't done our course, And I honestly recommend you to take our course to understand when to take stop losses, how to protect your position, and then how you can capitalize from a potential massive rally, upcoming rally once the economy enters into recovery stage, which is not the case yet. It's not the case yet. At the moment, we are actually focused into protecting our capital. But here in COVID, so you see this bullish, I don't know why I'm keep saying bullish. You see this bearish intersection here? Zoom up. Okay. Zooming out here, this is the bearish intersection that we had. And then as you can see, this is the SP ASX 200, as I just said before. But if we haven't used this stop loss on the bearish intersection here, it would have exposed our capital to a 35% fall. That was a crash, 35% fall. This is on the index only. Imagine the stocks itself. If you go to other stocks like the blue chip stocks, BHP, Commonwealth Bank, they all have fallen over 35%. Some stocks are falling more than 100%. That's back in COVID, okay? Now, what we have here is a completely different situation than COVID. It's almost like unprecedented situation. It's comparable to 1980s crisis, and then also some relation with GFC. But what I wanted to show you here is that the intensity of those red candles has increased so much into this last portion here that made me really worry. And according to our strategy, we don't want to hold stocks or buy more stocks when we have this massive pullback towards to the downside with very high volumes. Okay, and obviously a very uncertain situation because half of analysts think the Fed will stop rising interest rates. The other half thinks Fed will continue into interest rate hikes, but not as aggressive as it was before, provided they just announce bailing out banks in case any of the banks failing. And understanding about the way they bailing out now banks is completely different than GFC. And this time they actually finance bank liquidity, where back in 2027, the taxpayer end up paying for the positions. Now, I'm going to talk about, give a couple of examples of stocks that we speculate. Here at BG Trading, I'm not ashamed to say that sometimes we get wrong, and that's why we have countermeasure and protection to ensure our capital is completely protected and we're taking a minimal loss. So I just realized the video is going to be really long, so I'm going to split in two. So this is going to be part one, and then I'm going to talk about economic cycles and the macroeconomics in the part two video. So now let's give you an example. Megaport. We bought Megaport, and obviously external facts can happen with companies and particular situations. In this case, a company has reported pretty well. Despite the market didn't really got really excited, stock plunged a little bit during the reporting day. But fundamentally, Megaport is one of the growth stocks that was that has reported in a way that suggests the stock price would go up and will comfortably allowing us to hold the stock. Unfortunately, what happened is there was unexpected departure of the CEO, and then the stock has fallen ever since. And then reaching our stop loss. So stop loss essentially is just right here. We had the stop loss about 550 by memory, 520 by memory. So what happened is now, if you haven't actually sold or reduced drastically your position because of the stop loss, then there would have been another 20% down. today, as per today quotation. So that's why it's really important to take stop loss, protect the capital. Imagine if you have $100,000 position in this stock, then you would be another 20 grand down. If you have 50,000, it would be another 10 grand down. So that's pretty bad. And now with the current situation, with potential further degradation in the stock market, this is the type of stock that it has no protection. Absolutely no protection. It's a stock that will worth buying again later on. So I basically take a stop loss and make money when you buy the stock cheaply again to take the next rally. But it's not the case now. So you see like a large volume and the stock went down again. And look, not sure what's going to happen in the market tomorrow, but it's suggesting that's going to fall further. And that's why you need to protect the capital. Okay, so this is just one another example. So another one is Orkin Limited. Orkin also, it's another stock. Great, it's a leading producer, lithium producer in an ASX. But unfortunately, we're forced to take stop loss here simply because the chart formation suggests the stock could fall further. And we're not interested on holding the stock in the downturn. Understanding a little bit as well, the lithium prices continue to fall, and then also that's influence from the current stage that we are in contraction in the economy, and most likely that we're gonna lead to recession. Then commodities tend to underperform, tend to go down. You see iron ore stock going down, and then we most likely will see a further leg down here. With the next level, support level would be around $9.50 to $10, but we don't know until we don't know how deep this correction could go. But mostly important is you gotta have open mind that. Provided he sold here the stop loss and the stock falls hypothetically to $8, it's a great quality company making really good profit. Gonna profit again this full year despite the low lithium prices, and we probably will see lithium demand continue to increase. So this is probably one of the companies that we'll be looking at if it falls around $8. Yes, $8 potentially could fall around $8. We never know how low it can go. Okay, so so we'll buy the same number of shares and with a lot less money to take potential next big rally after the recession. After we have this recession. Okay, so and then that's what we're going to explain in the part 2 of this video about the macroeconomics and why we're tipping for a major recession and further decline on the stock market, and why we take stop losses across the board to protect capital. Guys, this is the first part of the video. I will see you in the next part soon.